So for chapter 14, technically you have four basic questions coming from this chapter, but this chapter is one of those chapters that feeds into and is seen again in many of the following, or many of the chapters past chapter 14, from journal entries in chapter 15 related to these calculations and concepts to overhead more generally or in more detail in chapter 17, inventory for process costing in chapter 16. Um, it is seen again and again throughout more or less the rest of the course. So while it's four technical questions from this chapter, technically it's overrepresented just because of how pervasive this content is through the rest of the course. So what you want to know from chapter 14 is how to calculate or chart the flow of inventory. Things like cost of goods manufactured, those ending inventory calculations. You will be given the flow chart that you were for chapter 14 in the first exam. You can see that on Blackboard. Let me look at Blackboard right quick. It is under the study resources for the final in a document called Formula Guidance. If you want to refresh yourself on what it looks like. I've got snippets of it throughout this primary study guide, like where it's relevant, but in entirety, if you want to see it, if you want to see it in its entirety, go to the study materials for the final study resources for the final exam, and see that formula guidance. It's about midway through that page. Okay, you also want to know what the implications or definitions are for certain categories or classifications of cost, things like product versus period, specifically the accounting treatment. Know what three costs are manufacturing or product costs, what costs are period costs in general. Understand what direct and indirect means with respect to how traceable a cost is and know how to identify examples of each of those. So let's just start here. So first, distinguishing product and period costs, they differ in terms of their accounting treatment of certain types of costs. So period costs are expensed immediately whenever they're incurred. Product costs are delayed. They first go to inventory. They're capitalized, meaning they're recorded as an asset first. And they stay in inventory, which is on the balance sheet as an asset until it's sold. And when it's sold, it becomes an expense via cost of goods sold. So basically there's this delay in expensing when it comes to product cost. And by product, we mean it is my inventory. My product is my inventory. There are three basic types of product or production or manufacturing costs: direct materials, direct labor, and overhead. All three of those are product costs. Only two of them are direct. Overhead is indirect, but it is still a product cost. I can trace those direct materials and direct labor costs back to the units that it helped create. The indirect costs kind of help generally benefit production overall, and it's harder to trace them back. I can't trace them back as clearly as I can direct materials and direct labor. What type of costs are always classified as period costs? Basically anything that is SG&A, or selling, general, and admin. Those are always period costs. So indirect costs, FYI, are always product costs. So they always have to be direct materials, direct labor, or overhead. Obviously, overhead is the only one that doesn't have direct in the name. Overhead is the indirect cost. And those costs are not traceable to a unit of product, at least not as clearly as direct materials and direct labor are. So some examples of indirect costs: remember overhead. So assuming I was a car manufacturer, things like plant utilities, minor amounts of like glue or fasteners or staples, things that are too inconsequential to track. It would cost me more money to pay someone to track it than what it's worth. Indirect materials or indirect labor. You got plant supervisor salaries. That's more generally beneficial to the entire plant. Indirect labor, indirect materials, or these other general costs are all examples of overhead costs. And overhead costs are always indirect. Direct costs, on the other hand, are traceable to a unit of product, and they include, so when we're saying indirect or direct, we're talking about product costs. Either way, so that means they can only involve direct materials, direct labor, or overhead. Obviously, direct materials, and direct labor have direct in the name. So for a car manufacturer, direct materials would be things like car engines, radios for the cars. I could trace those back to the units being made. For direct labor, it's the wages for assembly line workers. Direct labor is basically always labor cost for those who actually make the product. So basically always assembly line workers or production line workers. It could be phrased that way. But those are all direct costs, direct materials or direct labor. Like I said, direct is in the name. Now, you could be asked to calculate things like cost of goods manufactured. You are given this chart in that overall inventory flow chart. Once again, you can see that in the formula guidance document that is provided in the final exam study resources on Blackboard. Here it says ABC reports. This is just a snippet. This is not the entire flowchart. I've just got the snippet that's relevant to this particular question here. I'm going to write the things that I'm given that are provided in the formula or in the problem info in this gray color. I've got beginning work in process of 3,000. I add 9,000 in total manufacturing cost, this TMC. So remember this line here is a subtotal line when you've got the line that connects them like that. 3 plus 9 is 12,000. Of that 12,000, that $12,000 worth of materials or worth of inventory in process by the end of that period will either be finished. I've either used or I've either completed that inventory and it's moved on to finished goods. In which case, if I've technically that shouldn't say used, that should say finished or not finished. If I finished it, it's in cost of goods manufactured, which is where it goes when it moves to finished goods, or it's an ending work in process, meaning I've not quite finished it yet. It tells me that at the end of this period, 5,000 of that 12,000 resides still in ending work in process, so I have not finished $5,000 worth of it. It's still sitting there in process. So if that is the case, I had 12,000. I still have 5,000 of it. Whatever is missing is cost of goods manufactured. It has to meet one of those two fates. So that means there is $7,000 of it in cost of goods manufactured. If I had wanted to write it out, beginning work in process of, that formula is not provided, by the way. 3,000 plus 9,000 minus what I still have. $7,000. Here I'm asked to calculate raw materials, ending raw materials, so that right there will be my X. It says I purchased raw materials of 10,000. I had in beginning raw materials 2,500. So altogether, add those together. Both of them are flowing in that Same bucket. $12,500. These materials, I've either used them or not used them by the end of this period. It tells me the materials used in process, which would be going to work in process, is 8,500 of direct materials, 1,000 of indirect. It just says materials used, so that would include both direct and indirect materials. So 8,500 plus 1,000, that should be 9,500. So I had 12,500 in total. I know where 9,500 of it is. 9,500 of it was used. How much of it is left? 3,000. I wanted to write it out like so. $3,000. Okay, let us go to the practice multiple choice questions for chapter 14. Identify the three manufacturing or product costs that will always be direct materials, direct labor, and overhead. SG&A are not part of making something, they're part of selling it or just basic oversight. But to make something, I need the materials to make it, the labor to make it, and I need the general facilities and support, a la overhead, to make it. So by manufacturing costs, we quite literally mean the things that I need, the cost I would have to incur to quite literally make or manufacture the items. What is accounting treatment for product cost? So product costs are initially capitalized as inventory, and I would later expense them when sold. Specifically, I expense via cost of goods sold. This would not be product costs. Period costs are what are expensed immediately when incurred, and product and period has every impact on accounting treatment, and they are expensed when they're sold, so that could not be right. Remember that by product, we quite literally mean my inventory. My product is my inventory. Cost of goods manufactured. So if you look at that inventory flow chart up here, you see that it's coming out of this work in process. So I've got all these goods that were in work in process. I've got that much of it left. The rest of it is no longer in work in process. It's not in work in process because it is what I finished. So it is the cost of what I finished making in the period. Not what I sold, but what I finished. So the units still in process, meaning I've still not finished them, that is talking about ending work in process, not cost of goods manufactured. The cost of units available, that is talking about goods available for sale. So obviously cost of goods manufactured would feed into that, but it is not that necessarily. The cost of units finished or produced, that is cost of goods manufactured. The cost associated with units that could have been started and completed, that could have been language, is intended to help point you to an equivalency. This is talking about EUP, which is a chapter 16 concept. So the cost of what I actually manufactured, aka produced, would be cost of goods manufactured. ABC reports beginning work in process of $400. During the year, ABC adds $800 total manufacturing cost, all these things. I'm going to go get this and use it here. Okay. And note this should have said finished or not finished. Okay. So I'm asked to calculate cost of goods manufactured, so that is quite clearly my X. I have beginning work in process of 400. Added 800 in total manufacturing costs, so add that in there. Add those together, 800 plus 400, that is goes on the subtotal line here. Had 1,200 in total. I have 300 in ending work in process over here. So of that 1,200, I know where 300 of it is. That leaves me with 900 of it that I still have not accounted for. That is because it is cost of goods manufactured. So $900. Remember, you are given that chart, even on the exam. So go see that when you have an inventory calculation. Overhead costs. So they are product costs, but they are indirect product costs. Direct materials and direct labor are direct product costs. How do I treat period cost? So period cost would be expensed immediately as incurred. So right there, this right here where they're first capitalized as inventory, that is talking about product cost. And period costs are never capitalized as inventory, and they are expensed immediately. And period and product costs are kind of definitionally related to accounting treatment and differences in accounting treatment. Okay, select all that apply. Direct costs include product costs. So that means it could only be direct materials, direct labor, or overhead, no other items. So SG&A are out. And the ones that are direct have direct in the name. It is direct materials and direct labor. Indirect They're also product costs, so cannot be any kind of SG&A. Those are automatically out. And it's indirect, so does not include direct product costs, only overhead. So basically, if you see indirect, they're talking about overhead every time. And it's indirect in that it is not directly traceable to your product units. Which of the following is an example of a direct cost? So it must be direct materials or direct labor. Plant supervisor's salary, that would be overhead, which is indirect. Rent for plant facilities, that is overhead, which is indirect. Engines for cars produced, that is direct material, so that would be direct, so that's my answer. Electricity or utilities for the plant, that would be overhead, so indirect. Which of the following is not a product cost? That's just another way of saying which of these is a period cost. Period costs always include S, G, and A. So overhead, that is indeed a product cost. Direct materials, a product cost. Direct labor, a product cost. SG&A is a period cost. So that would not be a product cost. That would be my answer. It's a period cost. Cost of goods sold. Know the definition here. It is quite literally the cost of the things that I've sold. So costs associated with units that could have been, remember that is talking about equivalent units of production. Units that are still in process at period end, that is ending work in process. The total units that I've not finished, or the total cost of the units I haven't finished yet, they're still on my assembly line. Cost of the units that I actually finished or produced during the period, that is cost of goods manufactured. Notice it says I finished them, not that I sold them. The cost assigned to what I have sold, that would be cost of goods sold. Which of the following represents an indirect cost? Remember, indirect means it is overhead. We are talking about a car manufacturer. So tires, that is direct materials, which would be direct. Steering wheel, that's direct materials, which would also be direct. Wages for factory, maintenance, and janitorial staff. That would be indirect labor, which is overhead, which is indirect. So that would be my answer. Wages for assembly line workers, that is direct labor, which is direct. Overhead costs are or are not traceable to product units in the same way that direct labor and direct materials are. It is not. Basically, let's just mark these as true or false. Direct materials and direct labor are not direct costs. They are direct costs. That would be false. A direct cost is not traceable. That is wrong. Would indeed be traceable. That is false. Overhead is an indirect cost. That is true. A direct cost is traceable to product units. That is true. Overhead is a direct cost. Overhead is not a direct cost. It is an indirect cost. So that is false. Indirect costs are not traceable. That is true. Direct materials and direct labor, they're not indirect costs. They are direct costs. That would be false. Indirect costs are traceable to product units. They are not traceable to product units. So that would be false. So direct materials and direct labor, they're direct costs, so they are traceable. Overhead costs are classified as period, product, or neither. So overhead it's indirect, but it is still a product cost. Period costs would only include SG&A. Product costs are direct materials, direct labor, and overhead. I'm asked for February's ending raw materials. So let's see if I have a chart for that. Remember that these materials used includes both direct and indirect materials. They would both come from raw materials. So I'm asked for ending raw materials. So ending raw materials would be my X. I have $700 purchases of raw materials. Beginning raw materials of $150. Materials used $425 direct, $175 indirect. So $600. My total raw materials available for use had $150 flowing into it from beginning, purchases of $700. Add that to it. That gives me $850 in raw materials available. Of that $850, $600 of it was used. So how much of it would still be left? That would be $250. See, that is the end of my coverage of the study materials coverage of chapter 14. We will pick back up with chapter 15 in the next video.